All right, we're going to take a quick break here, but first Justin is going to introduce one of our key sponsors here today.
Yeah, thanks, Sam. Appreciate the time. So I'm Justin Freinberger. I'm our Regen Success Lead here at Continuum. And I'm not quite a talker like Mitch is, so I'm here to just introduce Fred Nichols from HUMA, who is our gold level sponsor, one of our gold level sponsors. So give Fred your attention. Thanks.
Thanks a lot. So with a name like HUMA, where better to be than the TopSoil conference, right? I mean, this is like the perfect venue for us. And humus is actually the inspiration for our name HUMA. So once again, thank you very much to the Hora family for allowing us to be here today. I've known Mitch for a number of years now when he was starting Continuum Ag, and what he's been able to accomplish with his team is nothing short of phenomenal in this short period of time. So thank you very much. So HUMA, name sounds like soil. Who are we? What are we about? Well, a lot of you have probably heard of us already. Biohumanetics was the name of our company. HUMA Grow products, Fertile Gold products, Mesa Verde products. We've now consolidated into one name, HUMA, right? It makes a lot of sense. It's a lot simpler, a lot shorter, a lot stronger, and it talks about what we do. So we are now HUMA, and we became HUMA on June 1st. We are a world leader in humic solutions, right? So a whole lot of products out there, and really what we do is we help you reach your soil health goals faster. You're going to hear a lot of great content today, and I think we can play in a lot of these conversations as far as how we can accelerate farmers to get to where they want to go. We affectionately say that we harness the power of ancient sunlight. Okay, so what's that really mean? Well, our products were actually derived during the time of the dinosaurs. Right? These humates that we mine are actually prehistoric plant material that did not turn into coal. So we have mines in Idaho and New Mexico where we actually mine our products. Some of you are very familiar with the dry humates, and we have a full line of those products. A lot of soil health properties that we provide there, a lot of soil fertility aspects. But in addition to that, our humic products are really the foundation for developing our microcarbon technology. And this is a line of liquid products that we have. So in addition to being a fantastic soil amendment and a way to build organic matter and to build soil health, humic products are excellent carriers of other products, right? So we have a full line of macro, micro, secondary nutrients, growth manager products, even crop protection products. But the catalyst for all of those is our humic acid product that serves as a carrier in our microcarbon technology. And that allows us to enable farmers to apply products at a very low rate, and allows us to actually utilize what's already in the soil and allow your plants to absorb that better and much more efficiently. We kind of call it supercharging a variety of products and nutrients. Soil health benefits, we think we have a lot of those. All natural products is certainly what we have, so we don't rely on any kind of synthetic molecules, right? So we certainly are all natural. We've got organic, we've got conventional products. But really, once again, I think one of the hang-ups a lot of farmers have that we talk to when they want to start with soil health and regen agriculture is, how do I get started and how long is this going to take, right? And I know we're going to hear some things today about, it may not take as long as you think it can and how we can get there faster. That's really what a lot of our products do. And once again, reduce reliance on synthetic products, improves nitrogen use efficiency, and allows you to do more with less. Product lines, not going to talk about that extensively here, but we have a full array of soil health products that will help increase microbial activity, microbial populations, once again, help cut down on synthetic products as well. And a full line of foliar products, macros, micros. We've got a product called Superphos, for example, that will allow you to apply at 1/10 of the volume of other phosphorus products. So there's a lot of benefits in using that kind of technology. I'd like to introduce my colleague, Michael Gardner. Michael, if you could stand up. Michael is our regional agronomist. He is a great person to answer any questions. He's also a a former farmer, and he's also a former Division I college decathlete. So if you're big into track and field, or your kids are, Mike can certainly help you with that as well. Once again, thank you very much, everybody, for the opportunity to be here. Thanks to the Hora family, and we look forward to talking to you today. You're welcome.
Thanks, Fred. Okay, everyone. Well, we are going to keep things rolling. 10:15, and we'll try to keep things going here on schedule. So the next stuff that we've got coming up on stage, we're going to have a panel discussion here and kind of go take things to the next step from what we learned here from Sam this morning, and really that concept of, okay, from what Sam talked about at the big picture scale, there's a lot of momentum going on. There's a lot of big goals that these companies have set. There's a lot of talk. And now we need to bring it back to, okay, what is really happening right now? What is happening right now? What is our opportunities for our farms? And how do we put dollars in our pocket? How do we be successful at implementing these things on our farm? So that's where we're going to really hit into some of that here next. So how we're going to do this is I've got kind of a fireside chat set up. I'm going to bring up each of my guests one by one. I'm going to have a little 7 or so minute conversation with them, and then we're going to do a panel discussion. We do have the ability for everyone to just text in your questions. We'll go through, make sure you put your name on it if you would. So text your question with your name to the number that's on the screen, and then my people will funnel those questions along. We'll try to get to as many of them as we can here. So, Mark, let's bring you up here on the stage first, and we'll get things rolling. My first guest is Mark Heckman. Mark's actually kind of a local here to the venue of where we got things today. And Mark farms down the road. We'll hit on that a little bit. But also we're going to talk here, Mark, about eco-engineers. And so maybe we just kind of start with that. Introduce yourself, as a farmer, but also then what is eco and what do you do for eco-engineers?
Yeah, no, thank you, Mitchell, for having us here. Eco-engineers is and actually, let's go to the previous slide. So eco-engineers is a company that models, so we help companies to monetize and value carbon. And then we also audit it. So we can become a third-party verifier, validator of carbon. And it doesn't matter which market. It's really getting interesting. There's a voluntary space that we all know of. It's the Bayer Indigo Outcomes Fund. And then there's also now, with the ethanol space, we've been in that market for, I think we're one of the longest standing. We've been here since 2009.
Wow.
Helping with that. So.
And those markets you're talking, so instead of just being the voluntary offset market space, some of these regulated markets, and that's where eco's kind of been tied into, like the low carbon fuel markets and like California and stuff like that, right?
Yep. So we bring the discipline. We make it so that those markets, we assure that the people are in the space are doing what they say they're doing.
Yeah.
We regulate the RINs. We validate the CI, the carbon intensity of all the plants. And as they make improvements to it, and whether it be for tax or California, some of the new programs that are coming out with the IRA, we're anxious for how that's going to look.
So the IRA is the Inflation Reduction Act. Okay, we're going to hit on that here a little bit later. So with Mark, and why we got to start here is there's got to be some regulatory behind all this. There's got to be rules. There's got to be regulation. There's got to be somebody that says, no, this is legit and this is real. That's what eco does. Yep. What does that process look like? Because it sounds like a lot of paperwork.
Yeah, it's a fun space to be in right now. Simply, if you're going into any of these carbon markets, you have to have a pathway. And those pathways are essentially, here's the rules we're playing by to get us there. It's a feedstock, it is the process, and then it's getting it from point A to point B. So it starts at scope 3 emissions, all the way scope 2, scope 1 emissions. Mm-hmm. And it doesn't matter the marketplace. There has to be that process established to put it into place, and a measurement and somebody with an oversight. So the monitoring, the reporting, and the validation.
Yeah. that MRV, we hear it talked about a lot, one of those acronyms. A lot of acronyms get tossed around here. One of the things you mentioned, Sam mentioned it too, is this Scope 1, Scope 2, Scope 3. Explain what that is a little bit, and then we're going to get into this slide that you've got that kind of digs a little bit deeper. But break down what the heck is Scope 1, Scope 2, Scope 3 from a carbon reporting perspective.
Yep. So really when it comes down to the carbon intensity of anything, it's the manufacturing process. That's your Scope 1. What does it take to make it and build it? And then the Scope 2 is getting it from point A to point B. The Scope 3 is the feedstocks and growing it. So it's one step forward, one step back. We call it well to wheels. So if a consumer is putting that fuel in their tank, and so, or if somebody is consuming that goods, what is all of the energy process that goes into that? And so the vagueness becomes how far upstream you go or how far downstream you go. And so
that's what makes it tough, is you're looking at what's called a life cycle analysis of what is the entire life cycle footprint, and that can be a huge journey when we are talking about ethanol. And that let's turn to that a little bit. So with the slide that you got here too.
So one more point on that. My Scope 1 emissions as a farmer becomes the ethanol plant's Scope 3 emissions.
Yeah.
Okay? So that's, if I'm using my own Scope 1 for my own stuff, the ethanol plant can't use my emissions as a Scope 3. So all of those rules are what we're going to have to play with as farmers and as industry.
You're talking on how it's reported and stuff, and that on our farms, our corn, our soybeans that we're producing goes into the next guy's supply chain. That means we're part of their Scope 3 footprint. So on our farms, we have our own footprint that we need to document and put some numbers on, and that's a little bit more confined because we got smaller operations than these, hundreds of millions of bushels ethanol plants. But we've got our own carbon footprint, but we're part of their carbon footprint, and they are part of somebody else's carbon footprint. And the opportunity here is to show, hey, we can produce renewable fuels with a lower carbon footprint than the fossil fuel. Explain that. That's what we got here on the screen.
Yep. So what you got on the screen right now, everybody's heard of the Inflation Reduction Act. And so there's a key point in this from the Inflation Reduction Act where an ethanol plant has to hit 50 grams per megajoule of, 50 grams per MMBTU of energy produced. So it's a mass balance of energy and product that's out here. And if you're below that, for every point, if you're producing fuel, you as an ethanol plant get 2 cents per point below that down to zero. So you've heard about carbon capture, sequestration. You've heard about the process in the plant and improving that. So this is a waterfall chart. On the left, what you're looking at is gray. That's petroleum gasoline. The gray section in that, the top lighter gray section, that's when you burn a gallon of gasoline, the carbon that's released in the atmosphere. It's been stored underground for numbers of years, but when you burn it, it combusts. Ethanol, just the production process and the feedstocks itself, can replace all of that gray. I mean, it's less than that. And the dark gray for the production gasoline, that's how they make the gasoline. And so all those next steps, renewable natural gas to fuel the plants, renewable energy as far as windmills, etc. Those are the steps that the ethanol plants have taken on their own. But now what Mitchell's talking about is clear on the right-hand side of that are the farming practices. It's the emissions that come natural as in the production cycle and getting it from point A to point B.
So what we're going to hit on is, ethanol overall. Okay, so gasoline has a carbon footprint of like 92 is basically, the score there. So 92 is gasoline. That's like the standard that we got to beat. Ethanol, you had on there is like 53 is the normal footprint of ethanol. 53, 56, 60, a score in there. We need to get below 50 to start earning these tax credits. Out of that 50-some carbon footprint, corn is a big part of that. Yep. And that's what we're going to hit on next.
So let's go to the next slide. Well, this just puts the dollars and the cents and the next slide.
Another one.
And so in the production side of it, the feedstock component, which Mitchell just talked about, 40% of the ethanol production is what you do on the farm as a farmer. So, and next slide.
So 40% of the carbon footprint of the gallon of ethanol comes from how we grew the corn.
How we grew the corn.
Yeah.
And today we're assigned a Midwest average. California assigns it at a 29.2, 29.3, depending on where you're coming from. And so this chart illustrates how you can, or how in this modeling, the Midwest average, the components that make up this 29.2. And so the work and the challenge that's in front of the industry is quantifying all of these components in the models that we use, so that if you implement a practice on your farm, how you can stray from or deviate from that Midwest average and account for that.
Yeah.
And so 3.2 of that is the farming energy, the diesel fuel, the electricity, everything to dry it. 12 points of that is the actual fertilizer component that you bought from somebody else. And then the emissions that come from the nitrogen in the fertilizer and your field is by reduced tillage, by using cover crops, etc., is a 14.8.
So out of your emissions coming from producing corn, the fuel, the fertilizer, those are the big ones. But then what we also are able to stack on top of this is the soil carbon buildup from the no-till and the cover crop. You don't have that on there, but that's how we see farmers can actually get to be carbon negative and offset some of those emissions, because we're still going to apply fertilizer. We still got to have yield, but we can actually offset some of that with the practices and be able to actually deliver carbon negative corn into the supply chain and tie back into producing lower carbon fuel here as well.
100%.
So we're going to we have a lot to unpack there, Mark. We went through a ton of stuff really, really fast. Let me bring up my next guy. Text in your questions stuff. We'll bring that back up. Mark, we'll swing back over to you here in a little bit, but I'll bring up Matt here next. Let's give Mark a quick round of applause, and we'll get Matt. Okay, so like what Sam was talking about before, these companies have this massive carbon footprint that they've got to address, and all of them use fuel. All of them use agriculture in their supply chain. All of them have to meet these goals. We can verify that what we are doing is legit, and we can document how we are lowering our carbon footprint, but it's got to be connected in with these guys. We got to be able to put a score on this. We got to be able to take something that is so huge and so not tangible. We can't hold on to this stuff. We have to put a number on it, and it takes modeling.
That's right.
And stuff. So we've got Matt Rawlick here. Matt and I have been buddies for a number of years here now. But Matt, you farm as well. Mark, like I said, farms just up the road. Matt, your farm is up in Minnesota, and you've got a farm in Arkansas. But talk here mostly about what is ARVA and how does the modeling and stuff tie into this? How do we quantify what we're doing?
Yeah, absolutely. So ARVA looks at agronomic optimization for sustainability, or what we like to call environmental assets. So carbon offsets were a big thing for quite some time. We are actually getting most of our traction with insetting, and that would be either sustainability claims or Scope 3 emissions or now CI scores. Those are our big three. So we leverage artificial intelligence and machine learning, some of which have just been developed over the last couple of years. And we take agronomics, everything that you guys have been doing already, farmers have been doing here in the upper Midwest and around the globe, and calculating scores of sustainability and CI and those type of things, and then looking at operations like what you're doing, the actual groundwork. We're probably more of the computer guys.
Yeah.
But then taking what you're doing, more of the groundwork stuff, implementing that in, and then starting to look at how different soils across the country in different regions react to environmental practices.
Yeah, so like a lot of you guys have been looking at, some of these different carbon programs and stuff, and they say, okay, plug in some of your data, and we'll give you a carbon footprint type of score, and then add cover crop or do some no-till, change practices. Now you're going to have a new footprint. And you guys have been doing that, but now companies are going even further, especially with the CI thing, which what I really like. Yeah. Okay, so it's not going to be as much about what were you doing, now change some practices, and that triggers a carbon offset, and we can sell that. Yep. Now it's about what is your carbon footprint, because our carbon footprint is part of that corporate carbon footprint like Sam had on his deal. So we can't steal all of Theo's thunder, but ADM's carbon footprint, Cargill, Walmart, some of these big companies that we saw on those slides, they want to lower their carbon footprint from within.
That's right.
A sustainability credit and inset. Explain, what are those companies talking about?
Yeah, if you look at where I live in central Minnesota, we've been implementing variable rate technology, nitrogen inhibitors, split applied, all these different sustainable practices for a long time. We do not qualify for the carbon offset market.
No.
And frankly, where I live at, I tried for 5 years. I did cover crops and no-till on some farms. And I quit it 2 years ago because I lost $500 an acre. That's not sustainable, no. Right? So you have to know your ground, and you have to know somewhere where these spots are at. We do have some fields that we do no-till or minimum till on, but majority of our area, we need to have it tiled and work it. But for these guys that have been doing environmental safe practices, which actually is a lot of the Corn Belt, they can qualify for getting sustainability and Scope 3 emissions. And it's really food transparency at the end of the day. Where is my food coming from and how is it grown? Mm-hmm. So we're working with corporate clients. I can say this here, but tomorrow we're actually announcing a deal with Nestle, where we paid out a whole bunch of farmers this past year. We'll be working with Walmart, Nestle, Mars, and a few others that'll be coming. If anybody's going to Field the Market tomorrow, that's where we're going to be announcing a bunch of this stuff. But in 2023, we're going to pay out almost $10 million to farmers for sustainable practices they've already done, and that doesn't even include CI scores yet. So,
my most favoriteest thing that we're going to talk a lot about today. I'm really excited. Okay, so but where I'm really interested in this too. Okay, so Arva and Continuum are working on a deal here as well that we haven't publicly announced yet either. Where I see some of the opportunity, number one being, okay, we need to make sure that we're telling our story correctly. Yep. We have to have really good data going in so that a group like a group like ECO can put the stamp of approval on it, but they need the data to be able to put the stamp of approval on. And that stamp of approval then is valuable to a group like ADM, who can put it into the supply chain, or some of the other companies that you guys are working with. But what I think, where I'm interested in working with Arva here too, is we're going to talk a lot here throughout the rest of the day about carbon intensity, CI, your Scope 3 carbon footprint, basically our carbon footprint and how it ties to the next person. But that's only one metric, carbon.
That's right.
There are a ton of other sustainability metrics and outcomes that I want to make sure that we don't leave on the table, because there's companies that want that story. And if we're only talking about one metric going into our supply chain, there might be other opportunities out there. That's kind of a new trend. What are we seeing from that?
Yeah, no, that's a great point. So we are working with, so I'm a sugar beet farmer as well in central Minnesota. Sugar is kind of the mafia, to be honest with you. But it's, you got U.S. sugar, which is sugar cane in Florida, Florida Crystals, Michigan sugar, Western sugar, Mindex, Southern Min, and Crystal American. So there is a way of how are we doing sustainability in sugar beets or sugar as a whole. The Rabo guy talked about sustainability in potatoes. For those of you familiar with potatoes, they're intense. We are doing sustainability in rice. We'll have a corn and soybean program with some people this year, and now we're moving into wheat. Milling is a big thing. You look at like Grupo Bimbo, which if you have any loaf of bread, you probably are familiar with Grupo Bimbo. But Arden Mills and these type of groups, it's understanding what does sustainability mean to them. Okay, so it might be a little bit different on the practices that it is, or in cotton, for example, for any of you guys who are dealing with cotton, it might just be PGRs and desiccant management to having better quality cotton and sustainably cotton. So a lot of them are what's coming up.
But it's all these groups that are talking about their corporate sustainability goals. That's like right. Sam was talking about. They all have different metrics. They all have different criteria, but we're going to have to put some numbers on this stuff.
Yeah, we are going to have to put some numbers on it, yes.
Yeah, and that's what's really coming. So let's move on to Theo. We'll dig in some more here later. Everyone help me in thanking Matt here, and then we'll come back to him in a bit. Okay, so now we can quantify this stuff. We can get it verified. We need somebody that's going to buy this. And here comes the guy with the money, Theo.
Oh, man.
I'm just kidding. But the middle guys in the supply chain have got to be able to take this, because our corn and soybeans or our raw product that we're selling can't just be sold to the end consumer as this sustainably sourced thing. There's a process to it. There's a supply chain to it. We're not just selling raw corn and soybeans to the end consumer. That's not necessarily what they're after. But now it's the supply chain that has to tell the story. We can tell the story on our farm like we've been talking, but we have to tell the story now at an ADM level. You guys have been experimenting with this. Explain a little bit what you've seen so far, and what do you need to do to be able to basically scale telling this story?
Right, so I'm Theo Gunther. I guess my title is Climate Smart Origination Manager for ADM in Iowa and Minnesota. So in the last year, ADM has rolled out a program, ADM Regenerations, which is our brand for trying to connect our downstream customers, the corn, soy, wheat, food ingredient customers of ours, with the farmers that we source from. And so the big change here now has been that how do we get farmers to sell us both their grain, but also the information about how they grew it. I know that's been a recurring theme here.
Yep.
And how do we transfer that to our downstream customers who are asking us about how it was grown, how it was sourced, et cetera.
So, and some of you guys might have known Theo from before when he was with Iowa Soybean and running a lot of the research stuff there, and was really digging into the cover crops and the no-till and the relay and some of these things that can help us to lower our carbon footprint. It looks like there's kind of a shift happening with some of these programs. They've been pay by the acre for some practices, and now there's a shift to, no, we're going to pay for your score.
Right.
And for the data, because you got to back it up. It's got to be legit, because it's got to go through some process, like we said, to not just say, hey, here's all my data, but here's the actual verified score, and it's becoming, here's that number. Because It's not just, I checked the box and did the practice, but no, here's my actual impact. That's really new. Explain kind of what's happening with that transition.
Right. So with our programs, we've got a combination, right? So we have customers that are interested in farmers that are using cover crops on the acres that they're sourcing from. We also have interest in the scoring, right? So we're looking at the outcomes, whether we're paying on an acre and quantifying the outcomes, or whether we're quantifying the outcomes and then paying based on that score. There's a lot of different approaches that are going to be taken, and we're dabbling and using several different ones within our program. So while we're doing things like paying for cover crops, we want to pay for cover crops on a per acre basis. It's simple. It goes with the way that those incentives have been traditionally delivered through public cost share programs. We also want to look at the future, right? So if we're looking at bushels that hit our supply chain directly, and farmers that want to score and use their data to get these numbers and then be paid based on that, or be paid additional dollars based on that, then we want to explore that as well. So there's a lot of game left to be played in terms of how farmers use their data, how they connect with these incentives, how they're quantified, how they're going, and also there's a variety of demand pulls, right? Whether it's a food ingredient customer of ours who's looking for a certain type of characteristic, whether it's the fuel incentives that Mark talked about, and you're going to touch on in more detail.
I think I'm going that.
Yeah, you're going that direction.
Yeah.
And also, there's going to be other outcomes of interest for downstream customers of ours that we need to source from farmers, and we want to work with the farmers that want to deliver them.
And what's interesting is all these different outcomes, they all kind of end up coming back to the same recurring themes. And it ends up being these principles of soil health, of minimizing disturbance, keeping living roots, optimizing the input that you're putting in there to make sure that we're being efficient, utilizing technology. Sam had kind of hit on that before with McCain's and with their publication. They did a really nice job. I think they've got a little 1 to 3 page outline of like what their metrics are and all that kind of stuff. But yeah, let's hit on the fuel side. ADM's evolved in the renewable fuels space, and one of these outcomes that we're able to now monetize is carbon intensity score. Explain from like the actual like ethanol manufacturer's perspective, what's in there. And I know it's not your like main role and stuff, but explain like what is the chatter from ADM, especially when it comes to 45Z and producing low carbon fuels.
So if there's a market for low carbon fuels, we're going to participate in it, and we're going to seek out farmers that want to supply us with low emission feedstocks. That's my role, is getting people signed up for those and connecting with those incentives. The people that are working at the plant all day, taking the corn, that are managing the processes associated with that and trading that on the output side of it, they're gonna focus on the parts that they do, and we're gonna be working on, we want to participate in low carbon fuels. We want to be competitive in that space. So it's going to take both the sourcing of the commodities that can be transformed into that, and then within our processes, Mark showed that slide that showed all the different steps in that. That's going to be all the way through to the end. So that's going to be how we're approaching this. We want the farmers to take advantage of and get part of that value. We're going to generate that value, and that's going to go to our shareholders. We're a publicly traded company. We hope we have some shareholders in the audience today. And we're gonna compete in that space.
So at the ADM level, they would have their overall ethanol footprint in that 50-some or whatever. I'm sure every single plant is a little bit different. I don't know what the actual numbers are. You guys are looking at building a pipeline to lower for some. Okay, so there's 3 different pipelines. Summit has one, Navigator has one, and then there's the Wolf pipeline. That's to reduce your Scope 1 footprint, what's happening at the facility. Then there's renewable energy and stuff that can happen on the Scope 2. Then there's the farmers on the Scope 3. And that's exactly what you're talking. How, like, for the farmers that are sitting here, I mean, that's my pitch is, hey, we got to get our data put together to document what is our carbon footprint, but what do you see as going to be the impact for farmers to participate in these initiatives?
So farmers over the past decade and a half in particular have been really focused on collecting the data, analyzing the data. That's what you do, right? So there's a lot of value that you've generated from collecting and managing that data well. That's value that stays on your farm. What that also does is it's a matter of showing your work, right? What you're doing and how you're doing it on your farm. If you can demonstrate that and you can have defensible information that shows what you've done, how you've grown it, that has value in other parts. And so we're looking at how we compensate farmers to make that transaction. We're not just buying grain, we're buying grain with a certain profile. And that profile of information is backed up by data. And that's how this will work, is we're offering incentives based on how you score and the data that you have about your farm. Not only does it produce value for you in making better decisions on your farm and creating value there, but it can also be of value to people further down the supply chain. So.
Yeah, because if you guys are going to prove to the IRS or prove to the feds that we've got low carbon fuels, you got to be able to back up that everything in it is low carbon as well.
And because I believe what farmers are doing. I've seen what farmers can do with and how they can grow crops in different ways. And so I know it's possible, and I know you guys have the information to do that. So we're looking for easy ways for you to monetize the data that you're collecting on your farm, and to show how you've done it so that we can pay you for it.
I like it. All right, let's switch over to our panel. Everyone thank Theo. We're going to keep rolling over here.
All right.
All right, fellas. I'm pretty excited. Okay, so everyone, we've got our text in. It looks like we do have some questions coming in, which is great. We can just kind of converse. We've got, I don't know, a half hour or so to continue to really dig into this and go as far as we want. But Mark, first question for you. Carolyn got like signed out or something here. Can you help? How big of a deal is this?
It's pretty big.
Do we know like a dollar figure and stuff of like how huge this is?
So just with the 45Z, and I think what's even more important is step back, right? Where we've been, there's been a lot of voluntary programs, but there's also now ISCC starting to play in international markets, and now with the tax credits, it's billions of dollars. The voluntary space has seen some really good values. They're $55 to $75 an acre. In an ethanol plant, I think you saw some of those numbers with 45Z. The value for that ethanol plant to reduce their CI to 0, if you're a 100 million gallon ethanol plant, it's $100 million if they can get the apprenticeship and all of the
some of the other red tape.
Some of the other the markers that they have to do. They're easy to meet. And so all of these steps combined and collaboratively mean lots of incentives to get it to change not just the process, but it's to change the climate and create this action so that we're producing the crops sustainably, we're doing the things that we need to do.
Yeah, so there's some red tape to it, but what he's getting at is in the Inflation Reduction Act, the max is $1 per gallon.
Yep.
As you go from a CI of 50 down to 0, 2 cents per CI point. You mentioned that before. But there's some red tape. Maybe hit on that a little bit more, because I think it's important for everyone to understand too, like that not all the rules are fully put together yet. And like ADM's not making all the, like, it's not there right now. This is still pending a little bit. Explain that real quick on like the dust that's still got to settle here a little bit.
So the goal is really to change that average, right? Today we're assigned an average as a Midwest, as growers, and incentivized through that average. But if we can change the practices enough, then that average comes down to 0. So collectively, those dollars are there. If we were to monetize all that and get it down to every specific farm, there's going to be some farm in Minnesota that's not going to be able to do some of those practices. So you have to look at it at a holistic process. And I think Sam had a slide up there that talked about, sustainable production in the U.S. And I think that's going to be a lot of our focus. To get all 29 points, and if I were to remove all mine and use manure as my, and that model affects it, to effectively score it, you ask how big it is. I don't even know if I want to say that number, but it's above $500 an acre that, the value the farm is bringing.
Yeah. So I'll say that it's $500 an acre. I've put it out there fairly publicly, where basically what it is, being able to show, hey, here is my corn and how far we've reduced our carbon footprint away from that 29 number. We're really working on our carbon footprint here now on our farm, and we're going to share some of that later. But instead of being at 29, we're a negative on our farm. Something around negative 4.4. Negative 4.4, go from 29 to negative 4.4. That's more than a 33-point drop. So if they were at 50 before, or a little bit more, we've dropped that by more than 30 points. Now, we're a small player, okay? So at ADM's level, they're dealing with a lot more than the grain coming off the Hora farm. So it's got to be blended together. At their level, they've got to have mass to get this work down. But if everybody was at the level that we are and doing these practices, yeah, it can be hundreds of dollars per acre when you convert from the per gallon footprint to the per bushel footprint. It takes looking at all these different pieces to do that. And Matt, for you, a question in here, and make sure put in your name and stuff if you would, or my people too. If we've got their names, put them in here so we can recognize who's asking. But question is on what is my farm's carbon footprint? How are my inputs factored in? My seed, the chemistry, some of the factors that go into running these scores.
Yeah,
maybe hit on that.
Yeah, so we look at ourselves as ARVA as an agnostic data aggregator. So we take your My John Deere, your Climate Field View, Raven Slingshot, anything that has to do with telemetric, bring that into our system. We look at your soil samples, we look at your yields and all those type of different things and inputs that you have, and we'll calculate out a score. We actually give an environmental asset balance sheet is what we call it. Everything starts at sustainability claims, if you will. So what are you doing sustainable for claims? And then Scope 3 emission is really just quantification of those claims. So that's really all it is at the end of the day. So some people like Walmart will only pay for claims, or they're only paying for claims right now, I should say. This Nestle deal, they're looking for the quantification of those claims. And then after that, then you get into what is the CI score. So a value of a Scope 3 emission is not the same thing as the CI score. A Scope 3 emission is like, I did a cover crop. Okay, well from this what's called biogeochem approach, where do I live? What are my soils? What are the characteristics? The value is X. And that range is different. So if you're in the plain states in western Nebraska, it might be 0.25, but if I'm in Illinois, it might be 0.75, just depending on that biogeochem. So we give each farmer through their trusted advisor an asset balance sheet, if you will. And then from there, go out and work with different CPGs to align that accordingly.
Yeah, that's what we're working on, like being able to say, okay, here's your data from a farm management perspective, your nitrogen fertilizer, the diesel fuel you use, the tillage practice, the cover crop, whatever. Those are the practices, but then, yeah, turn that into an actual score for certain groups that want to score. Certain ones just say, hey, we just need the practice right now, because the biogeochemical models that you mentioned, those are like the Comet Farm tools built on the Dacent model. There's Dacent, DNDC, Salus. There's some of these models that you plug the data into, and it runs the calculations basically as, okay, you do cover crop in Washington County, Iowa, here's what it does to your carbon footprint.
And part of our goal is, the reason why we don't go to farmer direct is, I mean, Mitchell's Network, for example, or if you got a trusted advisor, we work with other companies, is those guys know your land better than we do. You know your land better than we do. I'm not going to say, you're going to go do cover crops and we're going to do this. Well, that's just not realistic. What works for your operation? It might be adding fulvic and humics to your application to lower your CI score. It might be just doing split applied nitrogen or going from anhydrous to a 32%. But you guys need to make those decisions with your agronomic provider. We're just here to help get the calculations and help facilitate that trade.
So, Theo, question for you. We got a lot of really great questions coming in, and we'll try to get to as many of them as we can here, everyone. Theo, I know we don't know exactly here yet, but you guys have experimented with some stuff on this, okay? Do we know what is the potential financial benefit to the producer? And I know with 45Z anyway, that doesn't start until January 1st, 2025, okay? So on some of these federal tax credits, the dust has to settle a little bit, but you guys have been experimenting with some of these. You know, what can a farmer kind of maybe, what do we think where it's going to land up anyway, or, you know, as much as we can speculate, although it is speculation today.
Sure. So our incentives, we have them, they'll be available publicly. You know, we have a program that is in 13 states, 5 commodities. In Iowa and Minnesota, which I cover, we're going to have a per acre cover crop payment, $10 an acre. If you're participating in a public cost share program, it's stackable with that. We're also going to have a climate smart commodities program payment. Mm-hmm. So if you're a recent adopter of cover crops or you have a new acre, we can get you a higher payment. So those are all going to be available. If you look ADM Regenerations, it's on our website. That's where you'll be able to find information and inquire about it. The emission scoring, that's going to be, you know, really dependent on your farm and how many bushels you deliver directly to us. So right now, while our processing footprint is wider than just farm direct bushels, that's where we're going to start making those incentives. If you're at or below our facility averages and what we estimate, then you're going to receive a payment. The process, we try to make it as straightforward as possible. We work with Farmers Business Network, who's our data management partner, and you can get a score from them. You sign up for our program, we'll reconcile how many bushels you've delivered, and we'll pay you out based on the number of bushels that have hit our facility and based on your score. So right now, it's you know, we're setting the stage for it, and if the incentives change over time based on the tax credit opportunities or other opportunities with our downstream customers, that's where you can find them.
Yeah.
Mitchell, if I can add.
Go for it, Mark.
I think one thing that's important is we don't know what that value is back to the farm today, but the important item is we're beginning to set the stage. As Sam said, we're building the ship as we're sailing. Right? And I think he used the airplane, but I'd prefer to stay on the water, at least be able to swim. So anyhow, long story short, I think there's aggregators that are starting to come together in this whole picture that allows us that as these new markets develop, whether it be ISCC, whether it be the IRA, whether it be the actual fuels programs, a renewable fuel program that comes out that's all CI focused, I think those are the critical things for us as farmers to begin to gather our data, or at least understand how we're going to be able to present that to a company like Walmart. Yeah,
and that's obviously the resounding thing that we've heard already about 85 times is data. And it's data that's got to be turned into this score. I think that's the shift. We've been talking about collecting data, proving, yes, I planted a cover crop, or yes, I did no-till, or whatever. But now it's also at that next level. And a question here, Mark, kind of right off of that from Taylor, in terms of collecting that data for the models and stuff, how do we see the farmers, private companies, universities kind of working together? And does eventually every single farmer have to be collecting data for validation, like on a field-by-field level?
I think there's going to be averages that are accepted, or at least baselines that are set, and then the variances to that and how that is handled is going to be really critical in their whole process. Today, as a farmer, we go in and we certify our acres. If you're reporting your crop insurance, you've got to certify your yield. So there's going to be great collaboration through universities, through private-public partnerships, and that's what some of this Climate Smart is. Eco-Engineers is involved with some of this in setting the actual governance to create the program to help all these companies navigate these waters that we're going to have to go through.
Yeah, so it's the mass balance approach versus every single individual nitty-gritty thing. Now my approach, so everyone knows, is, hey, let's collect all the nitty-gritty details on a field-by-field basis, because I'm assuming if you're just at the average of all the rest of your farmers, that might be good for you, depending on your practices, if you're newer to some of this stuff, or if you're more advanced, you might actually be losing out on some opportunity by having to go with averages rather than going with your specific numbers. So I think just the opportunity to talk about your specific numbers and being able to turn this into some of these outcomes. But Matt, for question here from somebody, we don't have their name on this one, but we're talking a lot of different moving parts here. How do we make sure that we don't double dip? And then also, can you explain again here kind of inset versus offset?
Sure.
Because that's going to kind of throw a wrench into some of this double dipping as well.
Absolutely, absolutely. The SEC will regulate this at some point in time. This is a fungible,
SEC, the Securities Exchange.
Yes, this
Federal,
is a tangible, fungible asset. So for those of you in the finance world, this is, when I went to college, there was no money in ag. So that's what I went to go do is finance, and thankfully got to go back into ag here. But this will be regulated in some way, shape, or form, very similar to how your contracts are with your grain. You can only sell the grain that you produce. Now you can sell futures or speculative, but you can only sell the grain that you have. The environmental assets are the same gosh darn way. You produce the environmental assets, you sell the environmental assets. And there's going to be some things come along. We were actually in our Arkansas farm, we're the only VM42 approved carbon offset. And that'll be made public pretty soon. So I've gone through the carbon offset. We had to make public declarations that this to CGB, Bunge, ADM, Riceland, and everybody that we use for grain, that the grain that is produced off that, or that acre, can't be used in any other carbon programs. So this will be a declaration that's happening. So, but to answer your question about carbon offsets and insets, offsets are primarily additionality. So, and you can look back a couple years, but it's something additional that you're doing. You're adding a cover crop, you're reducing the tillage, you're doing a split applied nitrogen, you're changing a fertility. There's a whole laundry list of different things that you can do. Water is a big one in rice and some of these other areas. An inset is help setting baselines. As Mark refers to is help setting some baselines to understand what is that average in that area. And then if you need to reduce that, that is lowering scope 3 emissions. So that might be adding a practice, but you're getting paid additional to do that. So it all varies there. But an inset is within a supply shed. So where are you sourcing that, getting that grain from, or getting the poultry, beef, or pork, and what's all associated to it? That's where the sustainability claims and scope 3 emissions from the insetting market comes in.
So just so many different things there, and my head is just spinning, and we have so many questions I want to get to. But okay, so you developed a VM42 carbon offset, which is from Verra. Okay, so there's these regulatory bodies that create these carbon offsets on a registry. Verra is one of those, and they have a protocol called VM42. So you participated in that, and you made your own claim, your own carbon credit that you could go and sell to some kind of a buyer. They bought that carbon. Now your grain is going, and the carbon footprint of that grain can't be double counted by Bunge, by ADM, because you already sold it over here. You sold the carbon here.
The carbon,
just the carbon piece anyway.
Yeah, the carbon piece is different, but the CI score can be leveraged. That's what I like about it.
That's what's going to be fun. Okay, so that's what's going to be fun, where this carbon intensity score of the bushel, and as that goes into the supply chain, the rules on that are still kind of to be worked out. So, and there's a question here from Dale, I think, had on like, how do we get that score? There's a formula and a system set up called the GREET tool from the Argonne National Lab. That's one of the ways to get the score, I think. Is that what you guys are mostly looking at, Theo, the GREET tool?
Yeah, that's one.
Yeah, GREET tool. There's a couple different ones. Mark, do you want to maybe name one? GREET's like the main one, right?
GREET is, I mean, if you're looking at the fuels market and if you're looking at the Inflation Reduction Act, again, these rules are still, and the guidelines for them of how companies are going to use the GREET model. It's an effective tool that it's a spreadsheet base that says if you do this, here's how the score is.
Yeah.
So
and his question is also on like looking at historical practices and stuff. What I like about this is in these carbon offsets, like Matt was talking, you have to trigger additionality, which is here were your practices. Now you're going to do some new practices to trigger additionality, which is that practice change. And that's because of these global voluntary carbon offset markets. Like Vera, I was involved in writing the protocol for the Climate Asset Solution, or Climate Asset Reserve. Carbon Action Reserve.
There's some
Climate Action Reserve out in California, whatever it is. But now it's looking at what is your actual footprint of that bushel, and that is what's going to be connected through, but it's the data that's really important. The question here, and I don't know who wants to take it, how protected is that data? And how should we be looking at, okay, we're talking data. This sounds like it's going to be pretty valuable. How do we protect ourselves in this, and how do we make sure that farmers don't end up getting hurt by collecting all this stuff, since it is going to be regulated? Right now it's the carrot, but could end up being the stick pretty easily.
I'd like to take a stab at that.
Yeah.
I'll take a stab at that. I think that data has been underrated for a long time. Data, in my opinion, with the U.S. farmers is worth about $58 billion a year. And where I get that number from is, if you look at the amount of data that's collected today, all that information is being used for inputs. And our average inputs on U.S. is about $55 to $60 billion annually. There's reasons why corn is only sold in certain areas. There's reason why nutrients are only sold in certain areas. And there's reason why inputs are only sold in certain areas. This is all a big thing that happens behind the scenes. We at ARVA have taken an approach of a data privacy policy. So we take all your data, but it is yours. You are basically licensing our platform with your data and information. We're putting it all in one spot. It's all anonymized. But the biggest thing I can say is pick a partner to take to the dance. Mm-hmm. Feel comfortable with that partner and stick with that partner as you go about. I'll let these guys talk more about it.
Great point. What I was going to mention is these partners, it used to be a lot bigger picture, right? It used to be somebody taking a broader stroke, and what you're seeing now is you've got ADM, you've got ARVA coming together that are working with the Walmart so that you're working through your local supply chain, okay? So I'm more comfortable as a farmer giving my information to my local co-op to say, hey, this is where it is, that's my insulator, this is my aggregator that does that, right? We're dealing with data every day. Our cell phones tell actually everybody where you're at. It's geo-referencing and those types of things, and that's out there. So what I really like about the way these programs are developing is the data is probably more local, and it's somebody that you're used to.
It's a good point. I think what's interesting on that is, and Theo, you mentioned it before, I'm selling my grain like I always have, but now I'm selling my data with it. And that data is what's creating additional value.
Yep.
And now what's interesting here is that data is the only way that an ADM or otherwise is going to be able to monetize it from their side. They've got to have my data to monetize, and I've got to have them for me to be able to get rewarded for what I'm doing. A group that we haven't had in here, and John Norwood asks, what about the landlord in this? So we got the tenant and the landlord. How do we factor them in to this as well? Because obviously with all this stuff too, that's another like ancillary thing. If we're talking about additional hundreds of dollars per acre in low carbon whatever, that's going to continue to drive up farm revenues, continue to drive up price of inputs and price of land and all that, and the landlord's going to want to cut as well. But do we know how they're going to fit into these programs today?
It's not clear to me that it's going to be the same for every landlord or every. So what we're looking at is, we want to make an agreement with the legal responsible party, right? So the person that is making the opting in to participating in a program, sharing the information that's required, and attesting that they are the ones that are sharing this data and receiving the payment. So how the landlord and tenant work out sharing this value, I think is something that's going to be handled in that relationship. And if there's concern from one party or the other there about how this additional value is being distributed amongst those parties, then they'll work that out.
Yeah.
I'd like to add that if you look at it from a CSP equip perspective, just because you apply for them doesn't mean that you get them, right? And in order to get some of those payments, you need to be aligned with your landlord in order to have that land for 3 to 5 years. So I think this actually probably offers up a good opportunity to talk to them about that situation.
Yeah.
And then if, as you said, because it's not all the payments are here right now, but if and when those payments come for some of the outstanding programs, how are you going to handle them, and what does that percentage look like?
Yeah.
It also, it deals with the emissions, right? The emissions are like year to year, okay? And the soil organic carbon is the stuff that's going in the soil. So that could potentially be that dividing line of, here's the practices that I'm doing that's additional, and that's the cooperation of the landlord as part of it.
So question for you here, Mark, from Nick. We've been talking about ethanol this whole time. Ethanol is just one piece of this. This is all about all different renewable fuels. Hit on real quick sustainable aviation fuel and some of these other avenues, because, we're talking ethanol, but it's beyond just that. Yeah.
And of course, everybody in here knows the push for electric vehicles, right? So the light duty vehicles, it's really a big drive to get those electrical, right? Or in some form, battery, hybrid, or E85 would be my choice. But bigger picture, sustainable aviation fuel. It's a 35 billion gallon market, right? It involves soybeans. The feedstocks that are out here are used cooking oil and used fats and oils, etc. Ethanol can actually be converted into these fossil fuels. In order to do that, the feedstock to make sustainable aviation fuel has to be 50% of that aviation fuel. So it's got to be below the 50 CI type of score.
Yeah, got it.
So that big picture, long term, ethanol is focused on that. They're focused on addressing that as a feedstock to make sustainable aviation fuel, GEVO, the stuff that's happening at Marcus, etc.
So Matt, we're talking now a lot about fuels, but we're in Washington County, Iowa, where we've got a lot of pigs that got to be fed and stuff as well. Just real quick, how do you see, like, big picture, this impacting some of these other verticals as well, not just renewable fuels?
Yeah, the big fuel is obviously a big thing. I mean, to your point, United in 3 years wants 45% of their fuel to come from low carbon intensity soybeans. 45%. That means 45% of any grower that's in here, their soybeans, that's where it's headed. But as far as feedstocks are concerned, which I would say is our stuff after that gets fed to cattle, poultry, and to hogs, we are fortunate enough to have a feedlot, and the Cargill guy said to us a while back, if you could track where stuff is at, could you market this beef how it is. I said, yeah, we could do that. Walmart has made a very big pledge to I can't remember the town in Nebraska, but anyways, it's like out by North Platte. It's called Sustainable Beef LLC. They're going to be an 800 head a day kill plant, and all of that beef that it's being fed has to come from low CI score grain. So I'm actually going out there in 2 weeks to sit down with some of the local farmers and ranchers about that. This is going to go into the hogs. Tyson's actually made a public thing about this. I'm from the Turkey area in Minnesota. Hormel and them, they will be getting on this feed wagon as well, if you will. It's coming, and it's all going to be driven by data at the end of the day.
And you hit on Tyson's, and JBS is our other major player here, and it's also part of going back to what we heard from Sam here this morning from all these big corporate side. Now, to the question that Jeff brought up, Rabo is only playing in the food and ag space. But if they're going to meet their corporate sustainability goals as a financial institution, their portfolio has to be low carbon. And they all tie back to the farm as part of their supply chain. They're all going to have to get this figured out. Right now, it's 45Z that we're talking about as the driver, but that's propped up in Washington, D.C. Washington, D.C. still has to get all this figured out, and whoever wants to take, and the question was brought up here by Kevin and stuff, what if things change in Washington, D.C.? And this 45Z tax credit is it's still being worked through the system. Now, I did talk to our local Congresswoman, Marionette Miller Meeks, yesterday, seeing if she was going to come. She's been at this event the last 2 years. And recently, with the debt ceiling bill, our local Congress folks and others did really stand up to make sure that they didn't cut these low carbon fuel tax credits, but speak to D.C. a little bit, and what do we need to be watching for, or how concerned should we be there?
Mitchell, I think so. Mitchell and I happened to be in Washington, D.C. here 2 months ago-ish?
Yeah, April.
April, okay. And during that time frame, we spent a lot of bipartisan, both sides of the fence, talking about it. I would say this is probably the number one thing that they could actually agree on. Both from Republicans and from the Democrat side, this is something that they want to see. This is their kind of meet in the middle, if you will. It benefits both constituents on both sides of the fence. It provides the food transparency and also still fills into what the Democrats are trying to push from a SNAP perspective, and I can't remember whatever the other stuff is called. And also from the Republican side, this allows for free markets, which I'm all definitely in favor of, and capitalistic approach to the environmental asset side.
Yeah, I think it hits on a lot of those outcomes.
Yeah, I think it's going to come down to is it going to be managed by carrot or stick?
Yeah.
Right? And I think that's where hopefully there's some really good compromises, because the voluntary side of this, the voluntary approach of if I do participate in this and I'm incentivized by giving my data, then it's a really good thing, right?
Okay, we could go on here for a long, long time, obviously. We've got to kind of work towards wrapping and keep on schedule. A couple last things. Sebastian's got a great question in here. And a lot of farmers in this room already have probably a pretty darn good CI score. And question to you, Theo, and basically like, hey, for farmers here that already have a good CI score, what should we be doing to make sure that like we get properly rewarded for that, or do we know quite yet?
Right now, I'd suggest find a program that's offering to incentivize you, explore it, and figure out how to participate. One thing about the use of these metrics is that you go from incentivizing new adoption to incentivizing the top, the people that are the best performers. And if you've got a low CI score and we're offering you an incentive to share data that supports that, then you're going to be at an advantage over your neighbors or maybe not your neighbors, but if you're in a high adoption area like Washington County.
Yeah.
But if you're competing against people who are not doing these practices, I've heard that concern for years, is that the only people that you care about incentivizing is the people who haven't done anything. that have held back on making any of these changes. Well, that's not necessarily the case anymore. And take a look at these programs, how they're different than the ones that require additionality. Take a look at who's managing your data, how you can opt into these programs, and see what incentives are there, because they're changing and they're going to move beyond just requiring a new practice or a new adoption to get access to them. So that's what I'd suggest is don't think that of what's happened up to this point is necessarily going to continue into the future, and look at the supply chain where you sell into, and ask, what incentives are available for me as a high efficiency producer and as somebody who has made these practice changes over time to reap the benefits of that.
So in last question here, and you're kind of hitting on it, but we'll let each of the guys kind of give final takeaway and stuff here. But basically, as a final message to the farmers in the room, what's your message to make sure that they can win in this? Because obviously that's obviously my intent. I want to make sure that family farms are the ones that are the ultimate winners here, and that everybody gets an equitable share. How do we ensure that happens for family farms?
Keep your eyes open. Ask the questions about what's available, who's paying, and why, and be ready with your information if you're ready to opt in, and be ready to show your work, because that's what we're paying for.
Yeah. No, I would second that. Again, I would go back to picking the right partners in this. It might be your local retail, it might be your independent crop consultant, but somebody that you trust to handle your data and lead you to the dance, and definitely be open. There are programs that are out there and that are coming this year, especially with the Climate Smart Commodity Grants going full tilt boogie this coming year. There's going to be a lot of money available to help incentivize this, to get this engine running. So
I echo both that. It's select the right partner, get your data, embrace it, and really it is take a look at this with an open mind and try to get yourself organized first. There's already things that you're doing with your local FSA, your insurance. All of that information fits into this puzzle, but in order to make it so that this is a long-term sustainable process, you need to recognize that when you give that attribute up, you can't also talk to the next guy and use it. So there's going to have to be discipline and oversight.
Really good stuff. Everyone let's thank our panelists here. Thanks, guys.